Good afternoon, Henry Keane. He's here at UATV English Online and on air, Yaroslav Bigdan, financial analyst at Last Capitalist. Last Capitalist, hello.
So,
What is that? Last Capitalist.
Let's Capitalist is a Ukrainian project targeted at popularizing English. Damn it.
Yeah.
Popularizing just capitalism in Ukraine, because after Ukraine has exited the Soviet Union,
Right.
it was not really a priority of our government to teach people what is capitalism, how it works, how markets work, essentially.
People know that capitalism exists, but they don't know what is it and how to use it.
Exactly, yes.
But this is a great initiative, and it is a great thing to understand, and young people do that. But there's a whole bunch of questions I would love to ask in this in this regard. But what's going on in Japan? What about the stock markets? Is it all right? That's my next question. Well, tell me what's going on in Japan, because this is a disaster, isn't it?
It is a disaster. If you just look at Nikkei 225
I've seen
index,
it is down like
it is just a complete meltdown. 12.4% downfall. 12.4% downfall. The market actually triggered several circuit breakers. So when market falls more than certain percent, usually it is 5 to 8% per single day, the circuit breaker is triggered.
So you say 12% per one day?
Per one day.
Jesus.
Just like when it was night in our country, in Ukraine, the market started trading, and during the day it just fell down for 12%. It used to be at 35.5 thousand yens, I think. I don't really...
Yeah, what does it matter? I mean, 12.4% per day, it's a huge number.
It's a huge number indeed. And just the general question is what happened? Why?
Yeah.
So the answer is, it's obviously complex because the economy is complex, but the problem in Japan is that its economy is heavily interconnected with the US economy. And on the other side of Pacific Ocean, the data published on Friday afternoon was not really encouraging to buy stocks, really, because their manufacturing indexes shown that the economy has started to slow down,
right?
To shrink down. That's the first thing. The second one is the job, how to put it, non-farm payroll. They have the statistics.
Right.
The newly created vacant places on unemployment market. It also shrinks down. So there are several signs in the U.S. economy that the recession may be still possible. The fear that American investors really, they set it off the past year. They started to aggressively buying out the market since, I think, October 2023. Okay. And it was like in the continuous growth till today, till yesterday, actually, Friday, I mean, the past trading day. And when this statistics were public, they went public. American market started falling. They started to sell in pretty much all the tech stocks like Nvidia, AMD, Apple. They just went down. So the problem is with Japan, why it felt so hard compared to American, is first and foremost the changes that the American Federal Reserve is going to implement, considering this market data. Considering that the economy may fall into recessions, they may lower the interest rate. That is, in fact, that was a big hope of the market, hoping for the monetary relief and quantitative easing going on.
Okay.
So they've hoped it will, quite contrary, encourage the market to grow. But now when these statistics show up, and well, Jerome Powell, the Federal Reserve chief, said we will probably lower the interest rate in September, but markets still kept falling because the data is just disappointing. And as Japan is first country to trade their stocks every day, they were closed at the moment when the American news came
overnight.
So the worries accumulated, topped up with several news from Bloomberg about the issues in the large tech companies with making their investments being profitable. So another worry. And moreover, there was a new statistics from Warren Buffett's fund saying that Warren Buffett was dumping stocks heavily during the last several weeks. And that was just like a sledgehammer for the first one who came
Towards
into
hammer.
view. And the first one who comes into view each day is Japan. So they were hit hard. China was hit hard. Taiwan indexes also went down for 8%, I think, per trading day. And now we see Europe and the US stock market is also melting.
Obviously, if this, I have two questions. First question is, obviously, this is going to, in some way, also be a problem of Ukraine or not. And the other part of the question, which is actually the first part of the question, like there's so many analysts, there's so many experts, and you are saying, or if you, that's what you're saying, that everyone is living on a hope that whatever it is, but like stock markets should not live on a hope because it happens all the time. Do you say they're living on a hope, on the like imaginary friends that is going to help the stock market to, and then someone says a word, and then overnight the whole system collapses.
Yes. It is not a collapse, as
All
you
right,
call it,
okay.
but it's just
I'm
like,
sorry.
you know, they are really a lot of investors, especially smaller ones who do not have neither a huge experience nor just the access to some analytic data that may show them that the problems are coming. So they're really a bit egregious. I will use that term for this. So they do not really expect that things will happen that rapidly and that badly, because seeing your Nvidia investment tanking down just 10 to 15% at the morning, at the beginning of the week, it is disappointment, really. Just I don't remember such a huge meltdown happened even on the COVID-19 pandemic. So when it just kicked in at the beginning of 2020, market was falling, but it was not that much fragmented. So tech companies are falling heavier than just more regular companies. More regulars are holding at 5% daily loss at the moment, while the rest is 10 to 12 to 15%. Just you open it up and you see the entire market is red, but some parts are more red, and those are exactly the parts that were at the very top of the charts when you were seeking for something to invest in.
So what is it? Is it the second day of that, isn't it? It's the first day.
The first day, yes. It was in fact on Friday because, the news came out.
The first business day of whatever, if not a correct, of the meltdown.
Yes.
Are there any tendencies that things are going to turn to better or worse, or you cannot say
In fact, it is already getting a little bit better. I will try to keep my optimism down because it is hard to keep
my expectations low.
Yes,
Yeah,
exactly. Because having seen just the market falling that harshly, that terribly, does not inspire any optimism. But still, the market is slightly growing up. If you just watch the charts right now, from the point where it opened up at 9:30 a.m. By the New York time, it is slightly up. So S&P 500 started at -4%. It is now -3.1%. So it regained some of its fall
during the day. One day. Okay.
Nasdaq -5.7% at the open. Now it is 3.8%. But one thing I failed to mention when I was talking about Japan and just the situation is that the key of why Japan may fell down so hard is that Japanese yen has gained some immense strength. It did not see such a growth in quite some time, actually, because it gained over 11% in its value compared to US dollar, for example, in just 3 later weeks. And Japan is the country that relies quite heavily on export. And having a weak national currency, which is used to pay salaries, to pay for internally produced goods, is a key to sell the products abroad at a lower price.
Or at least it should be weaker. The weaker it is, the better it is for the economy.
Exactly. And having the yen growing so fast, it puts manufacturing inside the country into a huge risk. Actually, the key drivers of Nikkei 225 fall down is the manufacturing sector. Mitsubishi, Hitachi, Toyota, they fell down exactly 12 to 15%. So they were mainly the drivers. There are other companies, I just won't mention them right now. And one more thing, inexpensive, a strong yen puts into the overall situation is that some some of the stocks, some of the companies do not show that much of a growth compared to yen. So some investors will simply think, why would I hold my money in these companies when I just can hold them in yen?
There
And
could be
that
just
will be,
simply not enough money, not enough cash to own it. That's also the problem.
yes, that's the first problem. The second, the investment in yens, just keeping your money in cash, in fact, in local currency, will be more profitable than keeping it in stocks because they cannot offer that profitability.
As every professional, you have a lot of details of a lot of aspects of the problem, but you are teaching how to treat, how capitalism treats people and companies and otherwise. Give me an answer. What to do, all right, overall, how to avoid a situation like that? Because maybe we should inform small investors better?
In fact, small investors can pick the information by breadcrumbs, literally.
Right, but they just don't want to do that.
They don't want because it eventually turns your investing into a daily job because 90% when you are living off investments.
Well, that's true.
That becomes literally a daily job of researching and finding situations and
pardon me for interrupting. Small investor, how much is that?
Well, if we just count for Americans, that is the ones that have the deposit at the broker account around $50,000 to $100,000. So that is their small investors. Sure enough, there are just brokers that offer much less deposit as the first
they just
first
gather
investment.
Right.
I think I won't name any specific brands, but. Anyways, there are companies that allow much smaller deposits to be used on the market. Still, the vast majority of what we consider a small investment, small investors, is $50,000 to $100,000.
Okay, so is there any answer to the question, how can the situation like that be? Well, first of all, will that do any harm to Ukraine?
That's a complicated question because the problems on the American market, the recession of the U.S. economy at the first place, it may bring some significant problems to just to keeping attention on Ukraine. Because when the Congress will do their daily job, they will primarily pay attention to what happens inside the country.
Obviously.
And Ukraine and just all other abroad things will stay away from their attention, from their focus. And that's the first problem that I see. The second, I don't think actually monetarily US will struggle and will not provide the much needed support to Ukraine. But anyways, just but it's a very conception.
We're not getting into this
help.
Informational bubble.
Yes, getting through this information bubble as just the bubble of troubles that are around.
Bubble of trouble is a nice thing.
Imagine just Russia will invade Ukraine and COVID pandemics. No one will pay attention because America will just be head down in its own problems and will not just pay attention to what happens because they do not know what to do with their own economy to begin with.
That's a hard point. Yeah.
They won't pay attention. Now it is not that harsh and not that, I would say, unpredictable.
Because it's already improving. You see, a little bit by bit. So.
It's bumping, but it may be just temporarily. There is a term actually among traders called dead cat bounce. So when a cat falls down, it may just jump up a bit. So that may be just a dead cat bounce. And that is a worry because, well, no one really wants to buy the stocks right now, despite they are really at really great discounts at the moment.
Yeah, well, I mean, let's see. Let's hope that the cat is not dead, and let's see how
landed on his four paws.
Yeah, exactly. Well, okay, well, thank you so very much for your time, and Yaroslav, please keep us posted of what's going on.
I will.
Yeah, and hope to see you soon in our studio. Thank you. It was Yaroslav Bigdan with us, financial analyst at Last Capitalist. We were talking about collapse on the Japanese stock market and what happens next about it. UATV English, and me, Henry Keane, wishing you the very good day and stay tuned. And with us, see you very soon.